Hi everyone, this is June from Turning Point Life Investment, and this video is for the week of September 6, 2008. Starting with the monthly view, since we ended the month of August. All right, so we're going to start with a monthly view just to recap what happened this past month. As you can see, we were trading above the 20 and the 50-month moving averages. We broke below the 50-month moving average earlier this year. As you can see, we are creating a series of higher highs and higher lows, which by definition is a downtrend. Stochastic and the MACD are all pointing lower, so bearish momentum is definitely there. Now zooming in, you notice when prices dipped towards the 50, we found support, rallied back up, came back down, broke through it, and now guess what it's doing? It's testing it as resistance. Right, this is basically, it's classic. It's technical analysis 101. This is the foundation towards technical analysis. You have support once broken becomes resistance, right? And vice versa. When resistance is broken, it becomes support. Okay, now we go into a weekly view. And I think I mentioned 10 times already that once a stock is trending, we are going to use the moving averages as support and resistance. And right now it's acting as resistance, just like over here it acted as support. So obviously after the pullback from this hammer, we rallied and prices stopped right under the 20-week. You can kind of tell by the small bodies of the moving of the candlestick patterns. And then today, or this week, we ended with a very large dark body candle. Now, if you're bearish, this is definitely something you want to see, okay? Because it's confirming that this is acting as strong resistance. Most likely, we will probably retest 120. If that breaks, 115 is going to be your next support level. So we're talking about a 5-point drop if 120 breaks. Now 132, let me zoom in. 132 will be our new reference high, okay? What does that mean? Since we are creating a series of lower lows and lower highs, if we break through this 132, then it's no longer creating lower lows and lower highs. It's actually creating a higher high. So we have to analyze and see what's going on with the market once this level, if this level breaks. Now, I think I mentioned in the last video how we had a wedge pattern that formed several months ago. We broke underneath it, had a W looking kind of shape, and then the very large decline followed afterwards. Now, this past couple of months, we also had a very similar wedge-looking pattern. We broke down from it, and we also had a very similar W-looking pattern. And guess what's going on right now? We are experiencing this similar decline. Okay, very large, sharp sell-off, bounce back to the 20-day moving average. And most likely, that's what's going to happen. We had this sharp sell-off, probably bounce back to the 20-day moving average. Support was broken right here at 126.5. Okay, so if we do get a bounce back, most likely this will be retested right there. The new support is roughly around 122, and if that's broken, we look for support around 120. Now going into the hourly view, we were extremely oversold with the stochastic. We created a morning star candlestick pattern, bullish candlestick reversal this morning, and then basically that ignited the short covering. Now zooming in, you can just tell, looking at the candlesticks, look how large the initial body is, and then look at how small the subsequent candle bodies are. Very small, indicating a losing bullish momentum. Okay, the buyers are getting weaker and weaker, and you can also tell by the longer upper shadows that this is more or less a shooting star, you can say. And it's stopped right here around the 125 resistance area. And this also helps relieve itself of its oversold condition. So it's actually setting up for a very nice short bearish play right here. Now, unfortunately, I don't know if some of you might notice that there was a news release about a relief plan for Freddie and Fannie Mae. So that's going to put a kink in our analysis. During after hours, SPY was up towards 126. Now, depending on how the news is going to come out on Monday, if we do get a gap up towards 126, we are still right underneath resistance. Okay, my suggestion is do not trade based on that piece of information or based on that news. You still have to look at the charts. Let the charts tell you what to do. If we do get a gap up and the bullish momentum continues, then look for a potential bullish short-term trade. But if we fail to break this area, this is a very critical resistance area. We're at 126.5, and we're also right at the 50-hour moving average. Any failure, any sign of failure there would actually be a very good entry into bearish plays. Turning our attention to the VIX, I mentioned already that as the VIX was getting lower and lower, the MACD was getting weaker and weaker. That basically is setting up a bullish divergence. And that was apparent when we broke through both the 20 and the 50-day moving average. Now, if the rally does happen, most likely we will come back towards the 22 area. We're not exactly high enough yet, okay, towards the 30s to say that, it's showing a contrarian bearish play setup. So right now we're still in the middle. So as far as VIX is concerned, it's not really saying a whole lot, other than there's a shift towards a bearish momentum right now. And finally, we are looking at the open interest for September. This is the calls column of open interest. 130 pretty much pops up. That's probably going to be your next resistance level if we get a breakout above 126.5. So look for resistance at 130. And then looking on the put side, okay, one more. Okay, there we go. The main thing, right? It's still 120. Okay, very very obvious. So even just looking at the charts, 120 is going to be a very strong support level. So now, will that support hold, or will we just plummet through 120? That we don't know. Okay, but expect some kind of buying activity towards the 120 area. So once again, to recap, 126.5 will be our resistance. 122 is our immediate support. 120 is our ultimate support. And if the breakout does occur, look for resistance around this area. Okay, so just be a little more cautious on Monday. All right, there's a lot of uncertainties going on. So whatever happens, just let the dust settle out for a bit before going in. And if you're not sure, then just sit out. Okay, there's nothing wrong with sitting out. Okay, there's plenty of opportunities the market will provide for you. So if you miss this one, it's okay, right? You didn't lose any money.